Bodke, Head Investment Strategy and Advisory, Prabhudas, Lilladher. Good to have you on the show, Mr. Bodke. How are you reading today's market momentum? We've gained about 1% as we're inching towards the end of the session. Is this a trend we can hope will continue, where the kind of nervousness and volatility that we'd seen in the last few weeks is now giving way to some sort of reassurance, whether it's on the monsoon or hopes of a rate cut, something pushing markets up?
Yeah. Good afternoon, Shweta. I think there are two or three reasons why the market has been on an up move over the last few sessions. The CPI numbers that came in late last week clearly are pointing towards a battle which almost seems to have been won by the policies followed by both the RBI and the government. And the inflationary expectations, medium-term inflation expectations are getting well anchored. So with the CPI now firmly below 5%, well below the 6% target that RBI has set by the end of the year, I think the hope of aggressive monetary accommodation going forward the next 12 to 15 months is gaining strength. And going by RBI's own corridor of 1.5 to 2% in terms of real rates of return, if the current inflation were to hold, then at worst there is a 80 basis point, and at best there is a 1.3% corridor available for RBI to cut rates from 7.5% at the current level. And this is enthused a lot of market participants who are expecting that that in the next policy, which is due any time now in June, the RBI will oblige and will start with at least one rate cut of 25 basis points. I think the situation has got slightly compounded by the fact that the IMD forecast is expected to happen only in the second week of June. And the RBI possibly could would have loved to wait for what the IMD's forecast for the monsoons is before going in for an aggressive rate cut. The second is, although there were concerns that the crude has gone up by 40% from the bottom, let's not forget that it is still 40% below the peak that one had seen in June 2014 for $115. And we are expecting that on an annual basis, the country will be saving upwards of $40 billion, which is around 2% of India's GDP. So the current account deficit, which was one of the major concerns last time around in August 13, I think we are well over the hump. The external situation has stabilized significantly. Fiscal deficit is under control. So I think all the macros have already fallen into place and created a base from which the market is looking to move in the medium-term basis. And last point I would like to make is that with the passage of some of the key legislation by the government, I think hopefully in the monsoon session the GST should get cleared.
Right. So, and if the GST gets cleared, that would be a big leg up for the markets that are looking for that one positive trigger. You've mentioned a number of factors: crude, monsoon, the reform agenda. And now let's talk about sectors to watch out for as far as the next few weeks go. In a market like this, what are the sectors one should play into? What are the sectors one should watch out for that could possibly show some decent gains?
I think, Shweta, I'll be looking at two or three broader themes in the market. The first theme that I'll be looking at is what are the sectors that would benefit with the RBI's adoption of aggressive rate cuts over the next 12 to 15 months, the interest rate sensitives and the cyclicals. And within those, I think I'd like to focus on autos ancillaries as one of the bigger beneficiaries of a revival in consumption cycle. We are asking investors to look at Maruti Suzuki as part of their core holding. We expect the volumes to pick up in the second half of FY16. On the CV cycle, I think our interaction with Ashok Leyland indicates that the MCV HCV cycle clearly has turned, and with a 6-month lag, the LCV cycle also picks up historically after the turn in MC HCV cycle. So hopefully, I think as we move into the second quarter of current financial year, one will start seeing great traction in numbers in the MCV HCVs. And with revival in sectors like mining and with the economy picking up, logistics sector also picking up, our expectation is that Ashok Leyland should form part of one's core portfolio. We are expecting a target price of 88 with a one-year perspective in Ashok Leyland, and expecting a very strong 31% growth in revenues this year, followed by around 25% in next financial year, which should basically boil down to 376% growth in EPS for this financial year, followed by around 59.8% next financial year. The ROE should jump from 15.7% to 21.5% in FY16. In the ancillary sector, the kind of strong guidance that Motherson Sumi has provided, 5-year guidance, we feel that it should part of the portfolio along with Bharat Forge, which will be beneficiary also of the defense up move, the orders that should come in defense sector in the medium term, along with the fact that CV cycle improvement in India will be the largest beneficiaries. Shweta, the other sector in interest rate sensitives we are asking investors to look at is the banking, and there our preference continues to be with the private sector banks. Axis Bank and Yes Bank are our preferred vehicles for medium term investment, and I think with the sharp derating that a stock like Shriram Transport has seen, understandably because of the large increase in NPAs on the in the subsidiary, not in the main business, we feel that I think as the CV cycle improves, they will be able to, and they have provided quite adequately. The provision cover is around 80% in the main business. I think the stock is coming in the radar at a very attractive price if one is willing to take a medium term perspective. Stock has come up from 1300 rupees very, very sharply over the last 6 months, and one can start nibbling at that stock because the company has a very strong position in second hand CV financing.
Ajay, I just wanted to ask about the sense that you're getting from your clients, that what is the sort of mood in the market? Why essentially at every rally you're seeing some sort of selling coming in? What has suddenly changed in the last 1 month? What is the sense you're getting?
Yeah, so I think one has seen nearly $700 to $800 billion of erosion of wealth globally due to what's happened in the bond markets globally, and with the sharp spike in the bond yields that one has seen in Europe, in America, and other developed markets. And that's why I think we have seen some outflows on that count of the fear that I think inflows that have come in on the fixed income side. I think one could start seeing a sharp outflow out there. But that again, I don't think should, in my interaction with clients, the India dedicated ones are not taking it that negatively, because certain things like IT, I think, which have basically got battered in the current quarter because of the massive headwinds that they face because of cross currency problems. I think a depreciating currency will act as a tailwind, and we expect, I think, that those some of these names like Infosys or Mindtree or Persistent Systems to be big beneficiaries of a weakening currency. I think on the equity side, our interaction basically shows that there were certain niggling concerns that investors had on the MAT issue. But with the firm handling by the government, they have appointed Justice Shah committee, and in a time-bound manner, the committee is expected to give its recommendations. And the government already has allayed the concerns of investors that those who have come through the treaty countries, they need not worry at all, prospectively and retrospectively. So I think a resolution seems to be on the horizon for that contentious issue, and I think the government has allayed their apprehensions as best as it could. So in my opinion, the other point to be noted is that both the MFs as well as insurance companies, the domestic insurance companies, have been strong buyers because of large inflows that they have been getting. And my interaction shows that on a month-on-month basis, the MFs as well as insurance companies are getting very large inflows, and they are acting as a counterweight to the outflows that one is seeing.
Ajay, just a second. Asian Paints has just declared numbers. I'll just come back to you. If you look at the numbers on the face of it, 341 crores in terms of sales versus about 378 crores. This was the estimate. So about 5-10% miss over there. I have the sales numbers with me. 3,490 crores versus the estimate of 3,640 crores. So that also seems to be a decent amount of miss as far as Asian Paints is concerned. Remember, sales is the more important number for such companies, and you get a sense that there is a sort of volume miss that is there. 3,600 crores build in about 5% sort of a number as far as their domestic volume growth is concerned, but they've delivered about 3,490. Ajay, what would you make of Asian Paints? Sales growth missing by about 7-8%. You think that's a big miss for a richly valued stock?
I think it is a very big miss, because our analyst was estimating sales of 3,756 crores, which is a 13.6% growth on a YOY basis, predicated on 9% growth in volumes. So if the numbers have come in at around 3,400 odd crores, I think it is a very big miss for the company. We are expecting an EBITDA margin of 16.7%, a growth of which is 2.4% up on a YY basis, and our PAT number is 386 crores, which is a growth of around 29% on a YY basis. What are the PAT numbers? Have the PAT numbers come, Pankaj?
141, EBITDA has come in at 559 crores.
Okay, we were expecting 16.7% as the EBITDA margin and 386 as the PAT.
Right, so that's a miss. So what was the absolute EBITDA number if you have that? 559 is what they've done. Our consensus poll was about 600 odd crores.
Yeah, I don't have it right now with me, but it's a 16.7% on 3756.
Right, on 3756 it's about a 16% sort of a number. So around 610, 12.
16.7, 16.7, 16.7.
Right, 16.7. Okay, I just wanted to get a sense, Ajay, like, not looking in at, Asian Paints particularly, but a company missing the numbers by such huge margins. It has happened before, but the name has not fallen. You think that essentially this time around, we'll see some sort of shift from, such traditional consumer names to high beta, because that's where the numbers are looking decent. That's where the growth estimates are expected to actually lead to an upgrade. So you think this time around you may see that shift? We saw that for Lupin happening on a marginal basis, but for a company like Asian Paints, Colgate, they generally never tend to fall on the basis of numbers.
No, I think the market will have to take note in case the miss is too strong. Because as you said, I think, the companies have been valued they've been very, very richly valued, and they have basically discounted almost all the benefits that would come from a fall in crude and other commodity prices. And they're also sort of, valuing in a strong volume growth. So I think the market would take note of this very sharp miss in the bottom line and top line. And hence, they would be worried of getting into very richly valued companies going forward, and try to shift incrementally any inflows that they get to companies which, are not so richly valued.
Right. Ajay, always it's said that companies like Colgate, Asian Paints, some of the other big FMCG companies like HUL, they have very loyal investors. You think investors would wait for a while before they actually, start derating the name? I mean, it's down 1%, that's fine. But do you see a big derating coming in?
So what happens, Pankaj, is that, companies which have, these are blue chip companies which have sort of, delivered supernormal improvement in ROEs, in free cash flows, which are the two main criteria that investors focus on, along with, a very sharp jump in the sales and bottom line over years. So any derating for such companies doesn't happen if they were to miss miss the numbers only for one quarter. A structural derating necessitates investors to basically take a call after the companies have seen missing of the numbers for at least 3 to 4 quarters. So I don't think sort of, such companies would get derated based on a miss only for one quarter. However, it does leave a doubt in the minds of investors that how richly can the companies continue to be valued, and further re-rating certainly sort of, gets completely arrested.
Right, Ajay, thank you so much for joining us here this afternoon. Hope you have a great day going ahead. If you look at Asian Paints,